All right, good morning, come allez-vous? How are you? It's 8:04 on Wall Street in the AM. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. Welcome to Forex.Today, Pip Pirates, arr! Pip Pirates, arr! Yeah, boy. Welcome to Forex.Today, the YouTube community. More than 20,000 foreign exchange traders. Imagine that. 20,000 foreign exchange traders with 20,000 hours each on average. Oh my God. Huh? Cool, man. Cool beans. So we have a lot to learn. We have a lot to share. We have a lot to pay attention to. We have a lot of decisions to make. Very cool. So thank you for being here and your contribution to our community every single day. I believe that this YouTube channel makes the world a better place. I am not going to give you rah-rah speeches to get you to trade or trade more or trade fast or get rich quick or Lamborghinis or girls in bikinis. That's not what any of this is about. I'm an entrepreneur and small business owner, have been since before the days of being a VC. Even before that, I was just a tiny little high-tech startup and coach to startup CEOs. Yeah. Cool, neat, fine. So what does that mean? I look at Forex as a business. Man, it's a business. There's nothing get rich quick about being in a business. And if you've ever run a business before, you know exactly what I'm talking about. It's hard, it's laborious, and you get paid last. Yeah, but the secret to business success is pretty simple, pretty straightforward. Provide more value than you charge. Simple enough. So our job here as currency traders is to create value through thoughtful analysis and research, and then carry that out. Simple enough. So focus on the research, not getting rich quick. Okay? It seems to me that anyone that wants to get rich quick, no matter what path they choose, they fail. It's a childish, foolish errand, huh? Girls in bikinis. Isn't that a Kid Rock song? I can't remember how it goes. Anyways, so ask questions and I'll let you lead the way. Cool. So what will we do? How about we look at gold, oil, Bitcoin, and so on and so forth. Probably some dollar pairs. Yep. Sounds good to me. We have earnings coming out. We could talk about that. Second day of a huge week when it comes to earnings. In the description below the video, there's a link to my book. You probably already own it, but would you click the link and leave a review on Amazon? There's a link to FX Bootcamp. Almost everybody following this live stream right now is already a member of FX Bootcamp. So if you're not, you're probably the odd man out. Look, it's really, really, really expensive. $88 a year. But I promise you, you're going to say, oh my God, there's like at least $100 worth of value for only 88 cents. Or $88, I should say. $88. But I promise you, you're going to feel like it's worth at least 100,000. Cool. There's a link to Quant-in-a-Box. This is a research tool. Yep, it does macroeconomics for you. in 7 or 8 or 9 different categories on all these different asset classes, and then uses artificial intelligence to do comparative analysis and rank them based on logic. Sweet. Probably save you a bajillion hours. Yeah, that's super expensive too, $79 a month. So anyways, there's a link to that. Check it out. You can do a trial for less than $8. Yeah, that's it. And then there's a link to tradersway.com. They're a broker. You're a trader. They want to fall in love with you. Do you want to fall in love? Does your current broker offer you love and respect? If not, give Traders Way a try. But beyond all the jokes, I believe they are trustworthy and ethical. I believe they provide a great service. I think they give you features and benefits not found at other brokers. But it's their behavior in the real world that earned my loyalty and respect. And so I recommend them. It's a big decision for a trader. Don't take my word for it, though. Do your own due diligence, but go check them out. I'll push you in the right direction. Tradersway.com. Oh, I remember the line. Girls looking hot wearing less than bikinis. Oh, how's it go? Girls looking hot wearing less than bikinis. Driving Lamborghinis. I can't remember. Girls looking hot wearing less than bikinis. Huh, don't remember. All right, so let's take a look at the world as it is right now. Biggest winner, USD Rand. Okay. Okay, look at this now. USD strong, USD strong. Whoa. Then you go down here. Oh, glitch, glitch, glitch. But USD strong, USD strong. There's some risk off out there, huh? Now, if you are a member of FX Bootcamp, you already have a contingency plan specifically for that situation. Cool. But anyways, Euro Aussie up. Euro pound up. Euro CAD up. Okay. So Euro's still strong. But it looks like Kiwi and Aussie have stabilized, right? Because you see in the middle of the pack here, I see a lot of Kiwi stuff. I see a lot of, so anyways, remember how weak Kiwi was. So Euro Kiwi is probably flat. I don't know. Oh, yeah, here it is. Yeah, negative 0.09. So yeah, flat for the time being. And remember, it's up at a high price, so that makes sense. Rockman lovers driving Lamborghinis, jealous, because I'm out getting mine. Shay with the gauge and vanilla with the 9. Okay. Thank you, Bernd. Yeah. Girls looking hot wearing less than bikinis. Rockman lovers driving Lamborghinis, jealous, because I'm out getting mine. Shay with the gauge and vanilla with the 9. All right. Thank you. I don't make anything from it, customer. Yep. Doesn't affect the model at all, so I just kind of meh. Jealous. I like that. When does this? Hang on. Got meetings with lawyers this morning, huh? Yeah, meeting with lawyers to talk about my personal endowment funds. Probably going to have to do one offshore and one onshore. All right. So yeah, we got new home sales coming out today. I'll have to edit this. There's a glitch. You can see it's got date twice. That's not quite right. So I might have to edit that. That's probably time. It's supposed to be time to the event. Anyways, cool. A lot of Aussie news coming out later today or tonight. Well, tomorrow for them, tonight for me. So if it's a risk off day, you probably want to sort this by downtrends. And yeah, a lot of Swissy, huh? A lot of Swissy. Hint, hint, wink, wink, nudge, nudge. USD yen, I'm a big bullish. I placed an order last week, but I have a little paused. Well, I wouldn't trade those two against each other, favors. So I don't trade two funding pairs against each other. Okay. And based on seasonality, favor, you would assume US dollar weakness, Japanese yen strength. I know that's not necessarily the case that we have, but there's a lot of assumptions. So you bought it, and seasonally that doesn't make any sense. And then we have, we have turning points in both central banks in the next few months. So, I'm not sure. I'm not sure what you're looking at. Oh, going to Jim. Jim, I'm on Pro, and you might be on the regular version. And it may be different. Do I have that one open? No. So your version might be slightly different. So the cool thing is I can compare and contrast and get what I want by adjusting. In fact, I can just take a look at it now. These are earnings this week. Microsoft, Alphabet, Coca-Cola was yesterday, Pepsi's today. Some of these have already come out. Bank of America. Now, the big one was First Republic, and that's not even on this list. That was today, this morning, I believe, or last night. Anyways, total bloodbath for regional banks. So that might bring the stock market down today. As more and more regional banks get hammered. Wow, look at all this stuff. Wow, crazy. I don't want to look at that. Cool. So anywho, okay, that's what's on the mind of traders right now. First Republic, which has always been a high-end boutique bank for wealthy people. And, highly concentrated clientele. Not a typical bank. You know what I'm talking about? Not a typical bank. And so they got hit with very hard by redemptions. even worse than what people thought. And if it hadn't been, right, if it hadn't been for the actions of a group led by JP Morgan, they would be out of business. So they're really, truly a zombie bank right now. So I'm going to adjust some of this stuff. Sorry. Seeing if I can figure this out. No, I'll have to do that later. Sorry. Let me go put that back. All right. So once again, earnings are a big part of what's happening today. This is yet another test of the line. Let me drag this across. We've known this for a while. Not looking great on an hourly chart. Look on a 4-hour chart. And we're just paused out, and on a daily, we are on that buying price. Okay. Favor says, okay, I'm a bear, big bear on Aussie dollar. Whoa, but you just said you were a bull in USD yen. So you got to be careful, man. Well, no, actually, sorry, I'm wrong. You got that right. My apologies. What I'm watching right now, Favor, that would make a decision on what to do with Aussie dollar is right there. So if that comes down, okay, and in the near future we face a move like this, yes, I would sell Aussie dollar. Aussie versus US dollar. Yeah. Okay. If that doesn't happen, then this idea that you're talking about, you're a big bear on that pair, probably won't work very well. Maybe it works a little bit, but it probably won't work at all. I heard one of the best investments right now are pre-owned watches. Did you read that? That the Rolex Daytona is up pretty significantly. I bought a few watches lately. I don't know why. I'm not that kind of person, but I bought a few. And I have another one on order. Investments, I don't know, there's some interesting watches out there, but I was surprised that it's one of the best categories for investments right now. Got to put your money somewhere, and remember, if you're facing inflation, remember your dollar, your currency, it doesn't have to be dollar, your currency becomes more and more, it's worth less and less and less over time. So you need to convert it into something. So apparently, a Rolex Daytona with a few years on it is worth the same. The only thing is, in terms of dollar, if dollar weakens, then you have to pay more dollars for the same Rolex Daytona. You see? So your Rolex hasn't changed value, but the prices have gone up because the purchasing power of each dollar may be falling. That's what we call inflation. And in times of inflation, you want to get rid of your cash and buy a real asset. Typically, I would ask you to buy real estate. I asked you to buy real estate a year and a half ago. Now it's too late. Some of you did buy real estate. You're welcome, by the way. Back when interest rates were practically free, a mortgage was 3%. Remember that? So now in this situation with high inflation, you do want to own real assets. But you have to put things in the correct order, right? Remember when Grandpa told you that to hedge inflation, you should buy gold? But he didn't say wait for gold to go to the all-time high and then buy it. He also didn't say buy it when the Fed is fighting inflation, driving inflation down. Well, that's disinflationary and gold will go down. Okay. Now, Crypto Saved Me says, hey, I got 1.98 on the mortgage, never selling. And that's one of the reasons, by the way, congratulations, that's really good. Probably not a jumbo mortgage. So that's cool. Okay. I don't think jumbos ever went that low unless you put a bigger down payment, all that kind of stuff, or you paid a lot in points and drove that down, which sometimes makes sense. So it depends on the deal. I'd have to look at how you structured it, but that's really good. My point with will the real estate market crash if we go into recession? And just like crypto said, never selling. Why? People with cheap mortgages will never sell. Never, ever, ever going to sell it. Never going to sell it, 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 never sell it. Because you would sell your property and then buy a new property, logically. And the cost of the new mortgage would be so high, you would actually get less compared to what you already have. So think of it, dude, I don't know why you wouldn't have locked in a low mortgage in the United States. You had like 10 freaking years to do it. So if you didn't do it, nobody's crying. You were supposed to do it. Everybody was doing it. So if you're the one guy that didn't lock in a low mortgage, well, whatever. So most people in the United States are in a situation where they don't really want to sell. And even if they wanted to sell, it wouldn't make financial sense. So therefore, you wouldn't sell your property unless you had to. Unless you lost your job and you had to relocate. Well, that's similar to like a bank that had bought very, 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 very safe investments like government guaranteed bonds or treasuries, right? So why did the banks go out of business? Why is First Republic a zombie bank? Well, they were forced to sell treasuries at a loss. So if you're forced to sell your house because you're moving away because you ain't got no work, well, you're going to take a loss on that because not many people want a 6% mortgage. So for you to compensate them, you have to lower your price. Yep. But, right? Most banks are not like First Republic. So Silicon Valley Bank went out of business. Government came in and saved a few others. And the industry came in and said, as an industry, as a banking industry, they had to stop the systemic risk of bank runs. So the industry came in and saved First Republic. And it's good that they did because according to what we now know, which came out today in the First Republic earnings, they lost all their money. All their deposits went away. So they would have been forced to sell those treasuries at a loss. Right? And so JP Morgan and others, Bank of America and several others, Citigroup, they basically loaned First Republic enough money to cover the deposit withdrawal and maintain a perfectly imagine a good portfolio guaranteed by the government to be paid. There's no risk on those treasuries. You only lose money if you sell them. And so they prop that bank up. But right now, I think even Citigroup, Bank of America, JP Morgan, I think they're going, oh God, it's worse than we thought. The only reason they didn't go out of business was that lifeline. Like, it truly is a zombie bank. There's no depositors. Isn't that amazing? So they're not selling. Okay? So yeah, the whole point here is we need to break down the recession. Is there going to be a recession? When is the recession likely? And to what impact will the recession have? And on question number 3, the impact, well, real estate will probably hang in there. But for those that are in bad deals, stupid deals, or are forced to sell, yeah, they will take a loss. But that's how the market works. It's not my problem, and it's certainly not the government's problem. If you don't have a good mortgage structure for your property, yeah, you're going to lose money. Yeah, and you should. Sorry. But most people are not in that situation. So, yeah, that would push the US dollar up. Richard's talking about regional banks doing, getting, beating on revenue, but not on earnings per share. I don't think the market even cares about that kind of thought process right now. That's a normal thing. I think when it comes to regional banks, the only thing people care about, because you're talking about like, what are their operating costs relative to their revenue? I mean, dude, that's all the boring, esoteric, normal, everyday, run-of-the-mill, how do you value a small regional bank? But that's not what's going on now. That's not what people are doing. They're like, what are the deposits? Is there inflow or outflow? That's it. There's no other question. Who cares if their earnings per share is great based on what last quarter was, if they just lost 70% of their depositors? I mean, that's it, right? So, and when Silicon Valley Bank went out of business, and Signature Bank went out of business, and First Republic went out of business, and all these other regional banks had outflows, where'd the money go? Where'd it go? Where'd it go? Where'd the money go? Remember, there's a certain amount of money, right? There's this amount of money in the United States. There's a definite amount. There's an exact, precise number, okay? And remember, savings is equal to investment. Okay? So, a big part of the world, so your money's either in the stock market or the bond market, okay? Or it's in a bank. But the thing is, which bank? 1, 2, 3, 4, and 5. Okay? Where's the money? Where's it parked? And by the way, the reason savings is equal to investment is if you don't invest into the bond market or the stock market, then you put your money in a bank, earn a deposit, right? Or earn an interest rate. But then what do they do with it? They just buy bonds. So they'll invest it for you. Cool. And you get a cut. Great. But the thing is, this bank might have been a pretty decent bank. Okay? But now it's a much smaller bank. And this bank here was a big bank. Okay? But now it's a really big bank. Because money flowed from 1 to 2. But also some money went from 3 to 2. Okay? So money is flowing this way, and these banks are getting smaller, and this one's getting bigger, and we're trying to track that. And then some money might have gone from 4 to 5. So what we're talking about is market share, really. Okay? And that's what we're staking our claim. Like, think about it. There's like UBS and Credit Suisse. How old are these banks? 150 years old? Can you imagine for 150 years, UBS and Credit Suisse were mortal enemies, and every day you would wake up and battle your rival. And all of a sudden, pa-ching, UBS has 100% of the market share. What a different world it must be. Now you got to what? Wake up and face a new enemy. I think the CEO would have to create a whole different vision for the corporation and maybe even a different culture. Because the enemy's dead. Now what do? You create a new enemy. Okay, Favor says that S&P 500, you look at only if it go up, then all pair USD pairs against the funded, it means US gain value. No, lose value. No. Okay, because you would expect, if this goes up, what you're thinking is people are buying it. Well, yes, but if Americans buy the stock market, it doesn't impact the value of the dollar at all. So we're really interested in what do Americans do when the stock market rallies. The dollar would only go up if everyone else, okay, non-USA, let's do. What do these guys do with their money? That's what you care about as a foreign exchange trader. So when this goes up, Americans, who are, 30% of the entire global capital or something? I forget the number. It used to be a lot higher than that. But I'm just going to throw it out there like this is 30% of, of the entire world, one country. So when this goes on, there's what we call animal spirits. It's aggregate demand for everything because you're willing to put money at risk. And so a big portion of what gets put into play looking for risk and reward has to do outside the United States, just because we're talking aggregate. And what if the rest of the world is not fearful, not pulling money out of the market, but they're also not optimistic? Like there's problems. Okay, you're sick, but you're not dying. So you don't go out and play. Okay. So anyways, trying to make some analogies here where the United States investment community is big enough where if only, let's say, 80% of Americans go into the stock market, but 20% go and invest overseas, that would weaken the dollar. Okay. And are there more non-US people that would then say, we also want to buy? Like, would the like, let's say that let's put it in dollar terms. So let's say 20% of Americans invest overseas, and it's not just in general, but today, 20% of all the new capital being deployed into a new bullish market, let's say adds up to 20 billion. I'm just totally grabbing at numbers just to make sense, okay? And then the rest of the world, they feel okay, and they're like, oh God, we want to buy the S&P 500 as well. But this aggregate here of the rest of the world only adds up to 15 billion. Okay, in this case, what happens is you have $5 billion in outflows. Yes, the rest of the world said, oh God, we got to buy the S&P 500, but they also have a lot of problems in their economy, and maybe they're not quite ready to buy the S&P 500. They're like, we don't want to invest it. We're worried about how to eat tomorrow. Okay? Where Americans are like, oh my God, we can eat tomorrow and next week and next year. This is time to buy. Boom. And they're buying everything. They're buying the S&P 500 because it's going up. But they're buying real estate, they're buying used Rolexes, but they're also buying overseas investment or making overseas investment. And so, yes, things are good, and that does attract foreign investment, but the American economy is so powerful that even a minority outflow on the same sentiment could lead to dollar weakness in times of good. Okay? Typically, when the dollar gets ripper strong, the opposite happens. And the rest of the world says things are so bad in their economies. Forget the U.S. economy. Okay? Billionaires in Indonesia, Malaysia, or maybe there's fear by billionaires in Taiwan that China's going to take over and all that kind of stuff. Right? And I'm just picking on Asia, but it's all the rest of the world, non-USA, when things are bad to the point of they don't trust their own banks, they don't trust their own stock markets, they don't trust their own bond market, they don't trust the government, they don't trust their banking system. There's just zero trust. Things are really bad. Okay? And they feel like their economy can go into the toilet and there's no short-term recovery in sight. So they're like, you know what? We want to bet on the U.S. economy, in particular, the U.S. government, the U.S. institutions, like the bond market will pay you. Okay? You will get paid so you'll loan the U.S. government money because people in the United States compared to the rest of the world actually pay taxes. And if you don't pay taxes, shame on you. Okay? And that the United States will be able to use that to borrow money and then actually pay you. Plus, it's a reserve currency, so you might as well, you don't know how your neighbors are going to do and how that's going to affect your import-export for your country, your economy, all this kind of stuff, energy costs. So if you're going to hedge all these risks, you might as well be in US dollars and earn a yield on treasury. So when things are bad, the rest of the world comes to the United States, buys the US dollar to buy treasuries because they expect this to happen. And not just in not just in the US economy, but in particular, they're thinking their economy and the rest of the world. So you might see the S&P 500 fall, but it's really global aggregate demand destruction or productivity collapse, which is really, really bad. And in those scenarios, the US dollar is ripper strong. Okay? The bond market is ripper strong. Huge bullish market. Every foreign central bank in the world would be loading the boat on U.S. Treasuries. That's why you see when in a true bad global recession, interest rates in the United States falling and falling quickly. Not just interest rates by the Fed, but yield in the bond markets, the Treasury markets, which is actually even more important than the Fed, I would say, because it's led by the market, not by a government institution. So this is how, favored, this is a big, long way to answer your question. This is how I think of the world, generally. And then, yes, sometimes you need tweaks. And right now, really, we have such a strange world, the way that things have turned out because of government and central bank intervention, that some of these rules of engagement, let's say, are more complicated than normal. Okay? But it's still the effect of our zombie apocalypse. But the general model is still helpful to understand. When things are horrid, globally, don't worry about the U.S. in general, globally, the dollar's going to be strong. Why? It's the reserve currency. Nobody has a choice. You're like, well, what about BRICS? Well, screw them. Okay? Yeah, Jim, and so did Coca-Cola, right? So anyways, that flow of capital is likely to remain generally the same. Okay? Generally the same. So right now we're trying to decide, is there a recession coming? And if the answer is yes, okay, then we have to decide, well, what's the Fed going to do about it? Yeah, I saw that, Peter. I saw that this morning, right? Okay. Okay. Whatever. Okay. Brazil will just turn into an Argentina. Whatever. The world will change. That is guaranteed. But not all change is good. You know what I haven't done? I haven't looked at Airbnbs in El Salvador and see what they charge in Bitcoin. Not all change is good, but anywho. We do want to look at this, right? Favor says, well, what I'm saying is based on US dollar pairs, you look at the S&P 500 stock only. I look at them all, baby, because of what I just explained. But the S&P 500 is a very interesting gauge, Favor. It's a broad market, right? It has lots of breadth. There's lots of different industries. And there's medium and large size companies in the S&P 500. There's no small companies, so they're medium and large, publicly traded companies. And you can look at it generally, like the S&P 500. You can break it down into sectors if you want to be more specific. But it's a reasonable gauge on how is the world feeling, because we also know there's lots of foreigners that invest in the S&P 500. But is it the only thing? Well, no, because what I just pointed out is what we really care about as foreign exchange traders is how everybody else feels. Because when the rest of the world feels bad, do they buy the S&P 500? No, they buy U.S. Treasuries. So if, let's say, the Japanese stock market fell hard, The German stock market fell hard. The Eurozone stock market fell hard. Australia, the UK, they all fell hard. Guess what? Everyone in Japan and Germany and France, I know that's not CAC, but let's just say France, the UK, Australia, guess what they're going to do if their markets are collapsing? Buy U.S. Treasuries. But to buy U.S. Treasuries, they need to buy the dollar first. Okay? Bumpy says it's more about the Fed admitting that we are in recession. No, they don't do that. That's not what a central bank does. So I think it's the President's Council of Economic Activity, or is it the board? There's a board. There's somebody that actually says that determines recession. And it's usually like a year and a half after it's happened. So in 2026, they'll tell us when in 2024 we hit recession. And I'm not going to Google it, but yeah, but it's not like the Fed declares we're in recession. They'll say, well, there are economic indicators that show a slowing of the economy, but that's not their job. Okay? That's not their job. Okay? And it's good because that's not supposed to even be a determination of their policy. Okay? We want inflation levels and productivity levels. Obviously, if you're productive, you probably have a job. Right? So you can look at productivity and say, okay, well, that's another version of employment, but you want full employment. Why do you want full employment? Because it leads to productivity, right? Have you ever seen the productivity of Sudan? That's cool, Peter. Yeah, Amsterdam and Holland and the Netherlands and stuff. It's such a interesting history. I think it'd be one of these places where I'd like to visit for like from spring to fall and just learn the history. And it's I'm pretty sure like the tiny little bits of information that I have, and it's usually like I haven't actually studied Holland directly, but when you study all the other, history around it, you can put the pieces together and observe what happened to the Dutch. And like the Dutch almost ruled the world and really should have ruled the world. And they were very, very wealthy. And still are, but we're very, very wealthy relative to the rest. But they never took over the world. And, it would have been close, though. But wasn't it like the Spanish collaborated with the English to put the Dutch out? Ashish says, Sudan's data is skewed. The last update in productivity was 2017. The IMF doesn't even show much of it. Well, it just shows you, right? It just shows you how unproductive it is. It's not even measured. What's the point? By measuring the productivity in Sudan, you're increasing the productivity because somebody's actually doing something. So when you get a civil war where you have people running through the streets with AK-47 shooting each other, it's usually because there's a scarcity of resources. And why is there a scarcity of resources? Well, nobody's doing anything. And life is cheap because there's no self-worth, because you don't do anything. You wake up in the morning and you starve. So suddenly, if there's, let's say, oil around, you're willing to kill for it because it's you got nothing to lose. So if there's anything of value, anything, you'll fight to the death for it because life's worthless anyways. So you might as well, it's your one shot. Do not miss your chance to glow because opportunity comes once in a lifetime, yo. So anyways, I think the more productive your economy is, the more likely you can live in peace. And the best way to improve your productivity is through specializing in what you do so you get better and better at doing it, which is productivity and efficiency. But also you benefit from economies of scale, which is increases productivity and profit. So now you have higher levels of income and associated with the higher levels of productivity. But then you'll have a shortage of other things because you specialize. You make electric vehicles, but you don't make televisions. Oh, well, why don't you trade your EVs for TVs with some other economy? And now you have trading partners. And you benefit from their economies of scale and increase in productivity. And then you give them money so that you can get their TVs. They give you money so that they can get your cars. You have this, based on the supply and demand of these currencies, you get increase or decreases of valuations depending on if you have net inflows or net outflows. But the thing is, the United States and South Korea have very high levels of trade, very high levels of productivity, very stable governments, very democratic and safe, good institutions, and high levels of income relative to their expenses. They're probably pretty good places to live. I love South Korea, by the way. What a great place. I was hired many years ago by their government to... I did consulting work for the venture capital community in South Korea. So I got to meet at least a dozen companies. I did a 4-hour speech in South Korea in front of a room of high-tech CEOs and the president of South Korea's personal translator translated for me, right? I had a great experience there. Got to see lots of different parts of Seoul, right? Very cool place. Love South Korea. You should go. Oh, is that right, Wolfpack? Ashish says, yes, but they are the third largest country in Africa with gold reserves. Yeah. But most of it is stolen. Yeah, well, there you go. That's the problem, right, Ashish? Okay, not a small country. B, gold reserves, but not a lot else than that. And remember, when you're looking at an economy and you're trying to analyze the stage of production of the economy, if you're still digging in the dirt and selling whatever you pull out of the dirt to a foreigner, it's a very, 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 very basic economy. Okay? Typically, income levels are very low, education levels are very low, and the profit levels are low. Now, why? Well, it doesn't take a PhD to dig in the dirt and pull a shiny rock out of the dirt and then sell the shiny rock to somebody else. So there's no value add. There's no value creation. Now, what does this country do when they run out of gold or whatever the thing is that they do? Well, then they're just screwed. Now there's nothing. And you sold anything of value, you sold to a foreigner. So what does the foreigner do with the gold? Well, maybe it gets turned into semiconductors. So they take the gold and they put it through their process, and eventually it gets put onto a computer chip. Layers and layers and layers of gold in a perfectly linear straight line. 1 million 1/millionth the thickness of a hair. And you're like, dude, that's so thin, your eye can't even see it. Ooh, how do you do that? Oh, well, you got to like vaporize the gold. And you're like, how do you vaporize? Like, and then what kind of machine and what do you do with this thing that you're making? Oh, it's a semiconductor. It makes electric cars drive autonomously. And you're like, holy shit. Well, look at the value creation of the second economy. Well, we have to break it into pieces. The first country digs shiny rocks out of the ground and sells them to somebody. It's not sustainable. Okay? But anyways, they get some money and they're happy, but then they don't invest the money. There's no education. There's no infrastructure. Just they get enough to buy some food and that's that. Okay? So then the second country buys it and they're the ones that make the semiconductor. So there's some value add now. They have some high technology. To create this technology, you need very high levels of education. You need social organization and infrastructure and institutions, obviously, because this is the type of economy that makes those types of investments. But then the semiconductor gets then sold to a third country that makes the electronic vehicles, right? And because they're the ones that are saying, we need a very, very high-tech semiconductor because our cars and our economy drive themselves. The first economy, they barely even have a car. You know what I mean? First economy, they don't even have a car. They walk to work or they take bicycles to work or little dirt bikes because the roads suck. Because they got no money and they don't have the infrastructure because they don't make the investment like pay your taxes so the government can build a road. That process doesn't exist. The second country makes the semiconductors. The third country is so productive that they don't even drive their own cars. So while the car is driving them to the office, they sit in the car and do work. Or watch cat videos on their phone. Whatever, but they're so productive, they don't have to waste time driving. And their roads are beautiful, and the cars are beautiful, and all that kind of stuff, right? And so there's this cycle. There's this cycle. So Ashish, going back to that, where you're like, well, Sudan has gold. It's a big population. They have gold, but people steal it from them. Okay, well, it seems like they have gold, and yet, what do you mean people steal it from them? Do you actually mean people go in and steal it? Well, then you're like, dude, if you only had one way to make money, wouldn't you just have the entire population of the country guard it? You got 47 million people standing in a circle around the gold. Like, nobody's going to steal it. If you're talking about a foreigner. Now, if you're talking about your own people stealing, well, then you have this inefficiency in the economy that leads to poverty. Or if you mean they don't sell at world prices and all that kind of stuff, well, then once again, it's a problem. But the society needs to organize itself better to benefit from the gold. Okay, and then take any benefit from the production and selling of gold to foreigners and reinvest that into society and the economy. Sort of like how Dubai and the UAE realize that oil isn't going to last forever. So while they have money, they need to build an independent economy. Right? So, on paper, you could say, well, why doesn't the Sudan just mine their own gold, process the gold, and turn it into something, some next level product, not just shiny gold. I don't know if you can make a semiconductor. I don't think that that's going to be a viable, but add some other level of value. Now, and then sell that at a higher profit margin. You're not just digging it out of the ground, but you're turning it into some useful product. I can't think of a great example, but it's used in there's electrical uses, there's dental uses, there's whatever, there's a lot of uses. I mean something nicer than jewelry. But if they can make an intermediary product, a product used in the production of semiconductor manufacturing, then there's a value add, and then they can sell it for a higher profit margin. But to do that, you're going to need infrastructure and education, right? Because you have, if you remember the formula, the factors of production. Okay, the factors of production, when you're studying economics, is you have capital plus labor. Okay, so there's no capital in this economy. It's the Sudan. They don't got nothing. So you got to you got to build some roads and build some schools, and then maybe you can educate the labor force, right? So you do the use labor to the alpha, right? And so you get some infrastructure, and then you build some factories, and you bring in some tools. But that's even hard to do if you don't have a port, if you don't have roads, right? But eventually you got to invest in the economy. And as capital and labor goes up, then you could be doing things like, instead of just digging gold out of the ground, you create an intermediary product that can be used in the manufacturing of semiconductors, and you sell it for a higher price. And you have a little more money, and then you take that and reinvest. Okay? If you don't reinvest, the economy collapses. This is right out of the macroeconomics course I taught at FX Bootcamp. Right? If you remember, because if you don't reinvest, then your investments that you made in the past depreciate to the point of zero. And that's why economies like the United States have very, very, very slow growth, because they spend most of their time reinvesting to the things they already built. Think about it. You built a highway that has 100 bridges on it so that the crossroads can go over top, and you have this beautiful highway. Well, 30 years later, you got to go back and reinforce all the bridges. But every 15 years, you probably have to resurface the highway. So you have a highway which needs reinvestment every 15 to 30 years, over and over and over again. So your productivity is spent on staying above the level of depreciation. It's a really cool concept. So anyways, no disrespect to Sudan, but when you hear about the strife and struggles going on there, totally makes sense. Okay, totally makes sense. I would, right? What's the saying? Idle hands. The devil favors idle hands, or something like that. The devil has work for idle hands. It's just, right? If you were doing something, let's say you even love it. You were doing something you love, and that was leading to productivity that the rest of society enjoys. And because of that, they pay you for it. Remember, there's three parts. You're doing something you love, and because of that, right, you're happy. But the rest of society says, oh my God, thank you for doing that thing you do. They compensate you, not with seashells, but with dollar bills. And now you can buy food and have shelter and all that. And maybe it's even excessive because you're creating excessive value for society because you do whatever you're doing, you love it and you do it so well. Okay? And all of a sudden you're living a great life. You're not going to go out and shoot somebody, are you? Are you going to go out and rob a bank? Are you going to steal stuff from your neighbor? Jack, you fool, right? No. You're just like, dude, everybody's happy. Everybody's happy, right? What is Japan's Golden Week? It means they're not going to be trading, Jim. Oh, thank you, Russ. Appreciate that. So anyways, pretty high-level discussions today. And we've been in pretty quiet markets. So like, it looks like it's a down day today, but it may not be. Idle Minds, Devil's Workshop. That's not the one I had in mind, but it's the same thing. Yeah, it's the same thing. And I do this in the macroeconomic course. I tie in like what GDP actually means. And you might say, well, oh, Wayne, C plus I plus G plus X minus M. That's what GDP is, right? No. I say it's peace and dignity. Dignity. Did I spell that right? I don't think so. I can't. Like a college professor. I can do the lecture, I just can't spell. Anyways, dignity. That looks so bad. Anyways, it's not consumption plus investment plus government spending plus net exports. No, it's peace and dignity. And so if you look at Sudan and say, oh, there's war and destruction, it's because they probably have very little consumption, no investment, a worthless government, and no exports. So therefore, they can't afford to import because they don't have any money from exports. They don't have any hard currency. Will you take our Sudanese money? No, we like euros or US dollars. Well, we don't have any euros or US dollars because we don't export anything in our economy because we don't do anything. Well, in this case, maybe they have some gold. But if it's being stolen, it's probably being sold in the black market or outside of Sudan. So then, see, if you export, so if this is high, then you'll have, let's say, US dollars and euros in your central bank vault. But most likely that ain't happening. So if you don't have peace and dignity, this, okay, breaks down. There's no investment. Why? There's no government, or there's no government because there's no investment. So there's very little money. Okay, most of that money goes straight to consumption. Since there's no real serious work going on, there's no exports. And because there's no money, there's no imports. So what you do is whatever money you happen to have, that goes to like basic, like food, shelter, and that's it, right? And what do we call this? Core CPI. Okay. Oh my God. But who knows? Maybe Sudan has been like that for a very, very, very long time. Okay? If it happened 500 years ago, no one would even know, no one would even care. So maybe, right? So the Americans flew in one helicopter and flew out 3 workers, and now it's on your news feed as something important. I don't know. That's me just being a grumpy old man. Nobody likes grumpy old men. But I'm just saying, in the course of history, it's interesting how much things change and how much we care about everything. It's very important to Sudan, yeah. Okay, so this is still in play, and we've known this for 2.5 weeks. The question is, should we be freaking out? Probably not, right? Sudan better figure it out though, huh? They got to fix their own problems. Okay. It's not going to get a lot of help, is it? The white and blue Niles meet in Khartoum, its capital, merging to become the Nile River, which flows all the way to the Mediterranean via Egypt. Very cool. The history right in Khartoum must be incredible. Fertile land in the Nile valleys, yeah. Okay, remember Darfur? Problem areas. For most of its independent history, the country has faced substantial internal conflict that has weakened its ability to play a leadership role in the region. This includes 2 of the longest-lasting civil wars. Conflicts in Darfur, like, dude, unproductive. Okay? War is like, not only unproductive, it's destructive. You know what I mean? Like if you wake up in the morning and blow some shit up, you have less stuff. You should be building stuff, not blowing it up. Okay? Maybe, Russ. Maybe. But, Sudan has probably faced a lot of the same challenges for the last 3,000 years. I don't know. The secession of South Sudan led to multiple economic shocks, including loss of oil revenue. And this is kind of what I was hinting at. I didn't say it outright. But oil, I'm sure, is involved. Saudi Arabia was one of the people that negotiated the ceasefire. You're like, oh, what? So just think of a country that's got generally nothing. Yeah, okay, they have some farming and land that's productive that way. But most of that is just you're going to eat it and consume it. Okay? So it's sustenance. But soon as there's oil, you're like, wait, there's guys with machine guns running around the country shooting at the government, military troops. Well, why are they doing that? For peace on earth? No, somebody wants that oil. You got to watch that scene from Black Hawk Down, where they get one of the generals from the anti-government forces. What would you call them? Rebels. Anyways, he's like, go back to you Arkansas boys, right? This is my country, right? Right, do you know the scene I'm talking about? It's like one of those things like they're trying to sort their own situation out is what it comes down to. And they're probably fighting over oil. So South Sudan left, but I think they had all the farmland, right? North Sudan is what? Desert. It's a transit country. And they're going through Sudan to Libya and then to Europe. So everyone's getting the heck out. 800,000 South Sudanese refugees. Another 300. Yeah, crazy, huh? Continuous food price hikes. Why? Lack of productivity. They might not be able to produce. There's like, if you only have unproductive land, it's kind of hard to make enough food for everybody. Well, then prices go up. If there was an abundance of food, like Canada has so much food, it can't use all of what it produces. So it sells as much as it can, but it can't even sell that much. So then they give it away to unproductive countries, maybe like Sudan. Canada just gives them food. They're like, dude, we can't do anything with this stuff. But also, the Canadian government pays some farmers, not all farmers, but pays them to not produce food. That's a complete opposite. Now think of Canada versus Sudan. Quite a difference, right? Yeah. 2021, when nobody was looking, the world was worried about COVID, the military took over the country. Key government structures were dissolved. The constitutional charter suspended. Does this sound like a productive country with strong institutions? No. Okay? So really, the government collapsed first, and then people with guns went after the oil and gold so that they can have enough money to buy food and shelter. So the only way to be productive is to take somebody else's stuff. If you have to kill them, you have to kill them. Doesn't matter, life's cheap. That, right? Woo, those are big, scary words, but I'm trying to make the point. So that's called Machiavelli in. Okay, I can't spell that. Machiavelli. Niccolo Machiavelli was an Italian diplomat, author, philosopher, and historian who lived during the Renaissance. Niccolo Machiavelli. So he's the father of modern political science. Okay? Senior official of the Florentine Republic. I was just in Florence. He wrote comedies, carnival songs, and poetry. Yeah, these guys really, truly were Renaissance men. Quite literally, but also very interesting, right? Okay. He claimed that his experience and readings of history showed him that politics has always been played with deception, treachery, and crime. He also notably said that a ruler who is establishing a kingdom or a republic, and is criticized for his deeds, including violence, should be excused. If the results are beneficial to him as the ruler. Reverse that, I wouldn't have written it this way. To be a successful ruler, you have to be treacherous, and probably violent. So in the time, remember, Italy hadn't been created yet. So Italy was a bunch of smaller little countries, if you want to talk about it that way. And if you wanted to expand your economy, you had to invade someone else's economy and take their crap. Kill all the leaders, and suddenly all their stuff is your stuff. All the productivity of their fields and other parts of the economy now are part of your economy. You just doubled your GDP by simply taking somebody else's stuff. And we're still sort of in that process here when we're talking about Sudan. Oh, where did that go? I forgot. I must have closed my report. But we're in that situation where people are starving to death. There's nothing to do. The land is worthless. And because of that, prices are ridiculously high. There's way too many people. Not enough resources. The government has collapsed during COVID. And now military regimes have moved in because they want all the gold and the oil. Machiavellian, right? And if they succeed, they'll get all the gold, all the oil, they'll kill all the old government officials, and then they'll put in new government officials. and we just go back to life will still be extremely bad in Sudan. But it's probably been like that for a very long time, huh? And the cycle repeats. Yeah. But 500 years ago, you wouldn't have even known. You would have been sitting in London at the Oxford Club, smoking your pipe, talking about politics in your country, not the politics of Sudan. But anyways, none of it is going to be easy to fix. So the big issue is the land is not productive. So 50 million people shouldn't be living there. You see? So anyways, look, I don't mean to come across heartless. I'm talking about it from a historic and economic view. Okay? If you want to make a difference to any cause, you're worried about the starving children in Sudan. Okay, that's noble. But if you ain't got no money, there's very little that you can do about it. You understand? So you need to be productive and be an amazing foreign exchange trader and have the strength that most people don't have. And you're patient and you're disciplined and you do your work, you do research, you do economic analysis, you create strategies, you construct portfolios. Most people can't do it, but you focus your energy on the right activities. That means you're productive. There's a return on that investment. That's all productivity is. Okay? And you get this right. And you will have excess in your life. Because you're very productive and you can do things that most people can't do. Or you just do it a little bit better than everybody else. It's fine. And now you'll have excess capital. Okay? What do you do with excess capital? You save it. Okay? Or you invest it. And you say you will want to make a social investment and you want to save the starving children in Sudan. And so you find a nonprofit, non-governmental organization that might be providing food and medicine to children that are suffering in the conflict, in the Sudanese conflict. Cool. So you got excess money. Give them money. Okay? Money is the root of all good. Okay? And that's an investment. Now, the return on investment might be self-worth, dignity, happiness, pride, maybe world stability. Peace on earth is very productive. So that's your small contribution to peace on earth. There's some sort of return on investment, or you wouldn't do it. You're like, oh, well, if I just send money to Sudan and I send it to a good person, a bad person's just going to kill the good person, take their money. Well, I don't want to do that. I don't want to put my money in the hands of oil cartels. So you don't do it. Whatever. But I want you to focus on Forex. Okay? I want you to focus on Forex. Okay? And I want you to be as productive as possible so that you have excess capital that you can focus. You can wait for the U.S. government to fix things in Sudan. Or you can make decisions and deploy your capital the way you see fit. Cool. Change the world, brother. Plenty of things to do with your excess capital. Okay? So, Machiavelli, huh? Anybody going to read some Machiavelli? Walking around Florence, was able to talk with the kids and say, talk about the Medici, talk about Machiavelli. It's kind of cool. I drove past Galileo's house, who invented the first telescope. But when I'm in Venice, it was kind of interesting because you're in the big square there and there's a big tower next to the Doge's palace. And I'm like, do you know why they built that big tower? Nobody knows this. It doesn't say anything on any of the signs. And you're like, do you know why it's even there? They used to get robbed all the time. That's why they built Venice out in the swamp. So they moved it out there. Right? And what's their prime concern? They don't want to get robbed. So Galileo has this high-tech startup way out in Florence. He makes a telescope. And he's like, damn, I need to sell this because I need to raise money to make more. Who's got money? At that time, Florence was kind of struggling. And the leadership there didn't really love him. The Medici tolerated him, but remember, the Medici suffered through their own political stuff. So anyways, Galileo packs up his telescope, goes on the road to find some sucker to buy this telescope so you can see things far away. Realizes that the rich Doge of Venice is worried about getting robbed all the time. That's why they live in a swamp. So he goes to Venice, meets with the Doge, and says, you know what? If you built a tall tower right next to your palace, you could have somebody looking out this telescope and looking at all the ships coming into your harbor, and you'll know right away if they're good or bad. And the Doge says, damn, boy, that's exactly what I need. Boom. So standing in St. Mark's Square, we can have a little history lesson like that. I wish they taught that in the history books, though. Wouldn't that be cool? Yeah, Marcus Aurelius. Well, that's a whole different thing. I did find his statue in Rome, and I'm like, I got all excited with the kids. I'm like, Marcus Aurelius, Marcus Aurelius. And everyone's like, okay, Dad, cool. I'm like, that's Marcus Aurelius. You're kidding me. And then I talked to our guide, because I hired a guide, and I'm like, so is there a statue of Seneca somewhere like nearby? And he's like, yeah, I guess so. What a nerd. What a nerd. I know. Looks like a supermodel. Acts like a nerd. Nerd! Cicero. Yeah. Oh, did you? Is it Meditations? Trucking mogul? Marcus Aurelius's Meditations. I have his book somewhere. Talk to Johnny. Johnny read it. Do I have any? Marcus Aurelius. I have it somewhere. Anywho. Yeah. You know, there's a lot of interesting things that he was writing down way back then. One of them is he's like, daydreamers suck. People that have dreams are stupid. What he liked is plans. You wake up in the morning, you set a goal, you plan how to achieve it, and then you work your ass off to achieve the goal. And then he's like, and everybody else just daydreams and they're all stupid. Paraphrasing. But it's interesting that, you know, someone was thinking that so long ago and writing it down, huh? Daydreaming is stupid. Daydreamers are stupid and will achieve nothing. And you're like, dude, this could have been a book written now. Where you're like, how to get rich investing into real estate. Chapter 2, dreamers are stupid. Okay? Act like a champion. Okay? And then you write a whole thing about, yeah, you can dream about it or you can do it. Which one do you choose? And you're like, damn, this is so motivational. Marcus Aurelius would spend the whole day on a bloody battlefield in Germany and then go back to his tent and write down these types of thoughts in his book. Because if you didn't have a good plan the next day, you got a sword in your belly and that was it. So he wasn't about, I want to beat the Germanic tribes because I'm good enough, I'm smart enough, and gosh darn it, Caesar loves me. And then he became a ruler, huh? Didn't even want to become a ruler. So anyways, yeah. Well, I think being a dreamer is important if you put it into action. So you guys, you know me enough where I do a lot of thought. And you can call it dreaming. I come up with a lot of ideas. Too many ideas. I have so many ideas that it seems like none of them get done. Oh, but some do get done. And so it's the next step. Some people have no vision at all, which is good. They can just focus, which is good. Do this, do that, and you'll get this output. Great. And others are dreamers only, and there's no focus at all. And then I'd like to try to be somewhere in between where I'll have a million ideas, but 5 to 10 of them will get done and they'll change the world. And so, like a Marcus Aurelius, I meditate every morning so that I can try to achieve something today. Something. And most days I have to choose the 3 or 4 things that are not going to get done. But that is a decision. Because then I can invest everything else into actually achieving. Maybe I got to do 8 things today, but I'll only do 1 and I'll do that 1 right, and the other will defer and delay the other 7. But something's got to get done. And that reminds me, I got to go. I have an appointment with a lawyer to talk about how to set up a personal endowment fund. And there's very few things like it out there in the world. Very few people are really concerned enough about you that they would want your money to last forever. Okay? Russ, we're just waiting. That's all. That's it. We're just waiting. And if you're not sure what you should be doing, go to the higher time frames. Gold is just on our old line that we've already identified. The S&P 500 is only on our, right? is right on our line and has bounced. I mean, it looks terrible on the short run, and things are just fine on the longer run. If you were a bull on oil, you'd probably be interested in buying today or tomorrow. Set it up. Okay? If you were a bull, you can't do the fib anymore. So it's either going to do this now, today or tomorrow, or it ain't. Well, you probably don't need me to tell you that. Okay? And what is this? If you were a bear, okay, look, I mean, dude, if you're a bear, how many, we do this all the time, over and over and over and over and over, right? So this is still bearish, and it'll probably break and come back. So do it. If you're a bear, the strategy is clear. Sell at the central pivot point. Okay? If you're a bull, you wait for a double bottom, or in this case, a triple bottom. You could have, here's what one trade plan was for bulls. Here's the second trade plan for bulls. Okay? Cool. Which one's right? We don't know. So now you're sitting around waiting, not on a 4-hour, but on a smaller time frame for it to turn back up. Cool. If you do, take a shot. Bears have already done. They're done for the day. It's done. It's done. Where were you? I was a bear, but I didn't like the triple top on the central pivot point right between the 2155 sell zone. If you're a bear, you're so late. Like, how do you say it, right, Maida? Like, if you sold it now, it's either ignorance or negligence. So that's already done. You should have been shorted 15 hours ago. Come on, right? So now if you disagree and you're like, well, I'm not a bear. Cool. Well, this is what you're looking for now on a small time frame. You should be looking for that. This is only an opportunity for a bull, and it may not actually be real. Okay? A bear sold here looking for a lower low. So it's only interesting now if it reverses. Okay? Cool. 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 Okay? Yeah. Remember, you don't sell red candles. It's in the training course. You do not sell red candles. You sell green candles. You should look at that central pivot point and say bears are in play. Now, bulls are in play too. Don't get me wrong. Bulls are in play. They did what they were supposed to do. Bears did what they were supposed to do. Okay, bears are taking this down to $73. That's the target. I didn't make this up. Okay, so you could try to, if you're a bear and missed it because you were doing something else, that's fine. You'll probably get this tomorrow. Okay, so you can sell it at the price right now, but it with significantly less risk. Thank you, Brian. You know, and Brian, like, I need other people involved, right? Like, we need a base. And so I think it's a good thing but I need to structure it so that I can tell people about it. And that's the thing. But it consumes me. I'm like, this can last the rest of my life and beyond me. And there seems to be hundreds of thousands of financial advisors that don't do it. Oh, by the way, I found the radio interview. I found it. Do you guys want to hear me get all mad about the 2008 financial crisis and financial advisors did nothing to protect their clients? Didn't matter if you were a billionaire or an average Joe. Nobody did crap to save you. And obviously it's because nobody cares. Right? Because if you hire a financial advisor or a hedge fund manager, isn't that their job? Apparently not. That's not how they look at it. Hang on. I got to go to a different account. Let's do the time warp again. Where does this go? I'm probably under recent, huh? Yeah, I found it. You guys want to hear it? You want to hear me get all pissy? Yeah, I don't want to. No, there's no. It's on my drive, and no, I'm not going to share it. Hang on, but let me bring it back up. Okay, here we go. I think I can hit preview, and it'll play it. All right, here we go.
Well, we're still waiting for the last.
I can't hear it, of course. All right, so I got to turn my speaker on and off. Let me set this up, though. I'll never forget this. I'm in the penthouse of the Waldorf Astoria in New York City. This hotel room had a dining room table for 12 people, like a 2,000 square foot living room, a giant bedroom, all that kind of stuff. And I've been working and trading all day. And I go to bed like 4 o'clock in the morning because I've been trading all night. And at 7 o'clock, my phone rings. Ring, 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 ring. I pick up my phone. And it's my publicist. And they're like, you need to do this radio interview. We've been pushing it off, pushing it off, pushing it off. It has to get done today or it's canceled. And I'm like, dude, I've slept 2.5 hours. And I'm like, all right, I'll do it. Give me an hour. I need to get up and I need to shower. Right? So I get up, I shower, I power down like 2 energy drinks. I get some eggs Benedict with smoked salmon sent up to the room with a big pot of coffee. And I'm so tired I want to vomit. Have you ever been in a scenario like that? You're so tired that you're sick. So I'm like, okay, sure, fine. And so I go out into the living room because there's an office area in the living room. And it's near, there was it was a corner penthouse, so it had 2 walls of windows. And so there was nice light over there, but not in my eyes. And I could have my coffee. And I couldn't sit down. I had to walk around. Right? So anyways, we do the call. And I have to do it over the telephone because back then cell phone reception wasn't very good and this was being recorded. So anyway, so I'm there and ring, ring, ring. I pick up the phone and this is the interview. Okay. And this is Sky Radio that was broadcast, I forget where. Okay. Now, good. It's all set up. There we go. So put yourself in my shoes. What would you say? What would you say? All right, so let's get on with it. Let's see if I have to start it over again.
Well, we're still waiting for the last of the dust to settle after the world economic pileup a few years ago, and things certainly do look different in the investment arena than it did before the meltdown. Now it's time to look at the investment market with a new point of view because it's a new environment, and our next guest has some very interesting perspectives on that. Wayne McDonald is Chief Executive Officer for Sound FX Investments, a strategy, advisory, and capital management firm specializing in the foreign currency exchange, or FX market. Wayne McDonald is something of an expert on the subject. He wrote the book, Strategic and Tactical Forex Trading, is under his byline. He is on board today with us on the Executive Report. Wayne, welcome aboard.
Thank you very much.
Well, can't get a good idea of where we're going without knowing where we've been. What's your perspective quickly on the financial global meltdown of 2008?
Well, it was a very, very tough time, but really it didn't have to be so painful. And so what you do after a time of crisis is you need to learn from what happened and hopefully make improvements in the future. And what I found was the old model of buying and holding as an investment forever, something that might have worked for your father, just simply no longer applies to a world of leveraged hedge funds or zero latency, high frequency traders. The world is too fast. Investments cannot be measured by years or quarters. Now it's done by days or even hours, and the old model simply didn't work any longer, and the year was just way too painful.
The old model certainly did not work. The people and structures that were set up to protect their clients, financial advisors, money managers, people running hedge funds, they didn't end up with much of a score protecting their clients, did they?
No, and that's right. I mean, that's a really good point. We had what we thought, protection in place. Maybe if you're an average Joe, you were in a mutual fund and you were told that that was safe. But the only problem is they're really hamstrung by regulation. So a mutual fund, all they can do is buy. They can't short sell stocks. In fact, they can only buy particular stocks, and they're certainly not hedging. So that mutual fund that was part of your 401k simply went down 10, 20, 30, 40, 50%. And all you could do is watch. Now, if you're a little more sophisticated, if you had a little more money, maybe you had a financial advisor or a wealth manager, some MBA at a big firm, and the only thing is they set up your 401k, maybe they set up your college savings account, and they were supposed to be managing it for you. The only thing is when the crisis hit, they did nothing. They didn't cash you out at the top. They didn't hedge with options. They didn't hedge with futures. They simply advised all their clients to hang on, and a lot of those clients lost half their retirement account. Now, if you were ultra-rich, well, then you had access to hedge funds. And they could do anything. They could long and short, they could options and futures, and that's really nice. But the downside is you need millions of dollars just to get in, and even then, because it's so ultra-exclusive and secretive, you really didn't know what they were doing with your money. So if you got lucky, maybe your hedge fund was actually shorting from the top when the stock markets were falling. But many were stuck in illiquid assets, and the hedge fund simply blew up, and you lost all your money. So no matter where you were, average Joe or, king of the world, each level really failed you.
Well, from here, what's a sound approach?
Well, what we need to do, again, is not look at the world or, let's say, investing as a long-term, long-only strategy. We need to be a lot more dynamic. And so a new vehicle needs to be out there. It needs to be dynamic. It needs to be actively managed, but minute by minute, hour by hour. It has to have full disclosure. It has to have total transparency and really be accessible not just to the ultra-rich, but even to the average Joe. And this is what Sound FX Investments is all about.
Wayne, thanks so much for joining us here with a new perspective here on the Executive Report.
My pleasure.
Wayne McDonald's Chief Executive Officer for Sound FX Investments,
Bravo!
a strategy, advisory, and capital management firm specializing in the foreign currency exchange. We reached him by phone from Peachtree City, Georgia, and you can find out more on the web at www.soundfxinvestments.com.
Cool, huh? Oh, look at that. What, this one? Yeah. Yeah. Cool, huh? Called him out. Oh, man, I remember how tired I was, but yeah, check that out. Oh, boo, 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 just sitting on my desk. A relic. They uncovered this next to the Colosseum in Rome. We think it's a hat. It might have been a hedge fund. Anyways. Yeah. So same principles apply. Nobody's going to do jack to save you. You're going to have to take care of yourself, or I create something that Doesn't exist. So call me a dreamer, but I have Seneca and Marcus Aurelius in my office. Their ghosts are hanging out with me. They're saying, do it, Wayne, do it, do it, do it. So I can only do one thing at a time. I'm in my research phase, and right now I'm talking to lawyers. Will I start the fund? I don't know. I don't know if I'm allowed to. I don't know if I can. I don't know if it financially makes sense. Maybe I never cover my money. There's a million reasons why it don't work. Well, I won't know until I work toward it. And that's the difference between a dreamer. I'm not afraid of failure, but I love moving towards making things happen, huh? So anyways, hey, well, and Bumpy, I mean that in the sense like, if I start a fund, the primary focus is it has to provide value to society. I'm doing this for legacy. Then the second thing is it sustainable? Can I do it for the next 30 or 40 years? So it has to make enough money to cover its expenses and risks and all that. Like, it has to be sustainable, but that's irrelevant. If it's sustainable but doesn't benefit society, then who cares? So I have to start with, how can I contribute to the welfare of society? Can I provide $1,000 worth of value and charge $200? Then the second thing is, if I charge $200, does it cover all my expenses? And if the answer is no, well, then forget it. Or I have to charge more. But then that starts eating away at the first one. Does it create enough value? So research and talk to people, right? Hey, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Thanks for being in my life and on my team. Cheers.